Welcome back to Yahoo Finance Live. We are watching shares of Twitter getting a healthy pop in the session. Maybe we can call it the Musk premium. It is up nearly 3.5%. The social media company and Elon Musk, according to multiple reports, are on the verge of finalizing a deal as soon as this week. The $43 billion bid would give Musk full control over the platform. And joining us now to break down the potential deal, let's bring in Columbia Law School professor John Coffey. And Professor, it's good to talk to you. If you believe the reports, this could get done as early as today. What's your immediate reaction? It sounds like you were pretty skeptical even last week about a potential deal getting done.
The market was skeptical. They announced on Thursday that they had the Morgan Stanley debt financing for this deal, which was always the big question mark. The market stayed, however, between 48 and 49. It's now jumped with the opening today to between 50 and 51, whereas Tesla has gone down. Now, I think the fact that the market has only gone to just below 51 shows two things. The deal is much more likely, and two, the market is not really expecting that Mr. Musk will be forced to improve his price. Almost all people who start out with a hostile bid are required to move it up at least a big notch to allow the board of the target to show they did something for the shareholders. Right now, we don't know whether the board is going to try to get more or what it's going to negotiate for. Meanwhile, Tesla has fallen a bit, and that's because one man, even Elon Musk, is going to find it difficult to run four difficult companies, and he would be the CEO of four different companies. Moreover, Tesla is going to need constant management, and so is Twitter. Musk wants to change everything in Twitter involving how it presents information, how it gets its revenues, how it staffs things. All that's going to take constant attention, and so is Tesla, which is fairly thin on management debt. So I think we're going to see a continuation of that over this next week.
Let's talk about what it is we do know, because Elon Musk did disclose that he has secured financing. $46.5 billion is what he disclosed here. $25.5 billion in debt financing from banks. $21 billion is what he has personally committed in equity. How unusual is that structure?
Now, again, he may still search for partners, but it's difficult being a partner with Elon Musk because you never know what's going to happen next, and the stock price could be volatile. Still, he would be wise to get a little bit of equity assistance from someone else, and that may be something he's still looking for. I think also you're going to see a lot of hard-nosed negotiating over breakup rights. If this deal were to fall through, then you would normally expect Twitter's board to receive a several $1 million payment for all the turbulence and for all the time and trouble that Musk has cost them. That's going to be a difficult negotiating item. There are other things, too. I would think that the lawyers surrounding the Twitter board would tell them they have to do some regulatory due diligence. It would be very embarrassing to the Twitter board if days after the deal is struck, the SEC or the Department of Justice sues Mr. Musk for any of a number of possibilities, securities fraud, insider trading. I'm not predicting that, but I think you do have to do your regulatory diligence and make sure nothing like that is in the pipeline and could happen. Otherwise, you have a real calamity.
Specifically on the deal itself, what are potential regulatory hurdles you see?
Well, there's no real antitrust problem here. There would be for anyone else. Disney would love to own Twitter, but it can't because they're both close enough to social media, whereas Tesla is basically an electric car company that produces no antitrust problems. There will be a need to make an elaborate filing when you do a tender offer with the SEC, and part of that filing has got to describe your plans for the business. And Musk's plans for Twitter are a little opaque, a little cloudy. He wants to move from advertising revenue to subscription revenue. He wants less advertising revenue because he thinks it distorts the institution. He wants less censorship. He wants it to be more open. He wants to make the algorithm public so everybody can see what the process is, by which order, why which messages or tweets go to the top of the list. All of that's going to require elaborate disclosure, and it may produce some controversies, but I don't think there's a deal breaker in all that.
What do you think shifted for the board? I mean, this is just more than a week ago. We were talking about a poison pill, which is still in place to try and counter a hostile takeover. The board certainly had a fiduciary duty to consider the bid. Is it as simple as there just weren't any other takers? I mean, what do you think has shifted?
No, the board could decide to search. The board could say, well, we think the fair value for our company is hypothetically $64, and we're going to search to see if we can do better than this offer at 54. That would be a normal response. And there's also one other key fact that you did not mention. You mentioned most of the key facts. This is a staggered board. You can't do a proxy fight and eliminate these directors in one election. It would take you 2 years. That's a long time for Elon Musk to wait. We know he's not a terribly patient man, and he has a somewhat short span of attention. So I think that here, the board could have held him off, but they seem to be moving towards a fairly early resolution, despite all the questions about how he's going to change the business. So that's a development that no one really expected. And over on the Tesla side, I think there's going to be nervousness that Elon Musk is in some ways something like a child, and you give a child a new toy and it ignores and throws away all its old toys. Will he still be able to give the careful attention that Tesla needs because it's got a thin management staff? That's going to be an issue for Tesla investors, just as Twitter investors are going to have an issue whether or not their board should get more.
And on that note, we have seen shares of Tesla move on the back of this news as well, down just over 1%. Professor Coffey, good to talk to you today. Appreciate the time.